lasting. Chakri Lokapriya of TCG joins us right now on the show. Chakri, this inherent strength the last few days, dips are being bought into, and we don't have too many ferocious dips, even if the global markets are a bit awry. What's happening here? What have you been doing?
Good morning. Yes, I think for the first time we're seeing a recovery in industrial space, which has been the big theme that infra at some point will pick up. Capacity utilizations have improved at the highest levels in the last 4 years. Operating margins are beginning to increase. Now it's a question of the order flow continuing to translate into revenue for the company. So given the fact that you'll end up this year, FY18, Nifty earnings growth is hardly going to be about 5%. So the big thing is going to be the next year where this earnings growth is expected. So here you're seeing actual improvements. So I think from that perspective, you're beginning to see actual green shoots emerging from an Indian perspective.
Mm-hmm. Interesting. And then showing in the way the markets have been reacting for sure. As the 8 minutes have wound down, and Chakri, stay on, so much more to talk about. Chakri, we will talk about the today and now too, but I just want a couple of thoughts from you. The last few days, we've seen a surge in a few pockets which were lying low. Real estate is a prime example there. I mean, we're talking about Oberoi right now, Nonit was just talking about that stock, Godrej Properties, etc., all of them moved up. Raymond arguably has moved up because of the land development thing. Is it a bit of a return of flavor of real estate, and is it very selective?
One, it is selective, but second, you're also seeing evidence of just not the real estate companies. Oberoi is also very good. Its revenues were up strong. The margins are strong. So that indicates there's not too much pricing pressure in selling its residential units. And on the other hand, you look at companies like Vishakha Industries, HIL Limited, which all supply building materials like either rooftops or construction blocks. Those guys are seeing actually a margin improvement and an improvement in their revenue growth rates. And so all this is an indication that there is a pickup of activity, both residential and to a little extent the commercial activity.
Interesting. So would you believe that there is a bet to be taken, not necessarily only on good real estate companies which may show an uptick, but to the suppliers in a meaningful way as well?
Yes, indeed, because because most recent corrections, all these stocks have corrected. Uncertainty over banks, funding costs, etc., have been another reason for the correction. Now these are all these stocks, for example, the construction companies, are all trading at probably about 12-14 times for a 20% plus earnings growth. And so in that kind of environment, I think there is an investment case to be made, both for the short term as well as for the medium term. Now, and the bigger real estate companies have shown a propensity now to actually push inventory out so that they get their sales going, which is again good on the return ratios.
Neeraj, interestingly, there was a tweet yesterday from Twitter handle of CMO Maharashtra where they said that the CM has approved the scrutiny committee report on Mumbai development plan for 2034, which could pave the way for implementing the new development program for accelerated growth for Mumbai city. So I'm presuming if actually this goes through, this will provide some bit of fillip to at least the realty players which are there in the city of Mumbai. I think this was pending for a really long time. I don't know, it's a long-term game for sure.
I'm just wondering how will you and I reach office? That's the bigger problem really in the lower parallel area.
Okay, I'm not going to complain about infrastructure, which I usually keep doing to you. But let's move on to the other space. I guess the oil marketing companies, they bounced back in today's trading session. If you look at a couple of the gainers on Nifty, BPCL, HPCL, IOC, not substantial gains definitely, but they bounced back considering the sort of correction that we've seen in the past. Chakri, we've been talking about how the crude oil prices have been rising, how that could pose some sort of inflationary threat going ahead in terms of macro picture as well. But what about the oil marketing companies? Because if there was a news in case the oil minister asked them to absorb any sort of losses, it could be a threat to them.
No, that's the biggest overhang on the oil marketing companies. They're pretty inexpensive stocks. But whether they will be forced, there'll be a subsidy or there'll be some kind of price controls is the biggest issue. So from that perspective, we're avoiding oil marketing companies for that reason. And the other hand, Reliance is looking good for the same reason. Is that while its refining margins might kind of be a bit soft, but its petrochem margins are likely to show very strong numbers when they report earnings. And also Jio is firing on all cylinders, and it's an undervalued stock. So that's the way we would approach the oil space through Reliance.
Okay, since you mentioned Reliance, a word on the telecom space as well. The latest subscriber data that we see now, they're gaining traction even in the rural market.
Indeed, and and if you look at the latest ARPU of even Bharti,
Yeah.
it's actually down.
Correct.
So this is translating into a rural spend to sign up lower ARPU customers who are coming into the scene. That's reflected not just in the case of Reliance, but in the case of all the other incumbents too. And it's Bharti's loss and other existing players' loss, which is Reliance's gain. So clearly, for once they're showing, they're showing fastest turning to operating profit margins, which is a damn good thing for Reliance Industries.
Interesting. Chakri, I want to talk about what would be happening to exporters and companies which would see a higher export component and therefore increase in maybe capacity utilization as well. But just before that, one small question on this whole retail theme that certainly seems to be right in the thick of things. I don't know, it's got to do with the Walmart Flipkart deal, which has gotten these stocks excited, but almost everything is doing reasonably well. Trent is sitting at multi-year highs. There's some talk of Vishal Retail or Vishal Megamart being approached by some people for 5,000 crore valuation, which 5 years ago, nobody would have thought of. Shoppers Stop has this deal with Amazon. They are putting out some very interesting things as well. Have you studied this space? Do you like things within this pocket?
One is all the retail companies from pure trading perspective have corrected in the recent past. Second, from a more structural perspective, with the emergence of various logistics companies, it has transformed both their walk-in through the store as well as their online channels for the same retail company to push its products online as well. Now, when things start looking, and with an increased high street presence in addition to a mall presence, certainly the same store sales numbers have shown improvement for including Shoppers Stop recently. So on back of that, India is still in very early stages of its retail stage development, and therefore I think we will continue to see a strong interest from outside players in this space.
Okay, and therefore is there merit in trying to own any of these existing listed retail players from the current valuations, Chakri? I mean, is there a model that you like? If you do.
Yeah, I think still it's a pretty evolving space because the different guys cater to different segments. You have a Future who is at the low end of the segment, Shoppers Stop spread across. So from that perspective, I think they cater to different segments. But if anything else, one would focus more on the mass end, which is more the Future Group's strategy, which will probably see the biggest sustained growth over a long period of time.
It'll be interesting to see that. The second bit is, Chakri, what happens to players which are by virtue of either export growth picking up or select pockets within the domestic space picking up, seeing their capacity utilization levels moving up. We've seen evidence of that in certain cement names. For example, India Cements was saying that their capacity utilization levels are skyrocketing. Maybe a couple of other pockets to doing that. How are you playing this theme?
Yes, for one, cement companies have seen volume growth but less pricing growth. But again, like you just mentioned, India Cements is a pretty inexpensive stock, trading at about $70 per ton. So from that perspective, any marginal improvement in capacity utilization translates big time to its earnings and therefore to its valuation. So second, you're seeing companies like Capacity, Nagarjuna Construction type of companies benefiting from the infra growth. And on the export side, you have a number of chemical companies. IT, of course, is a different ball game altogether, but chemical companies are benefiting from this.
Well, IT seems to be back in action once again
and
today.
IT is back in action.
Wipro is trading in the green ahead of its numbers. It's trading with gains of over 2%. The Nifty IT index, in fact, is the sole sectoral gainer as we speak. A word on IT then, Chakri, before we let you go. We've seen numbers coming in from TCS, bit of disappointment from Infi with regard to guidance. This is the place which has outperformed so far, at least the other sectors. Do you think this trend will continue? Are there more legs to the rally?
I think this trend will continue because the valuations are still attractive. If HCLT, the numbers are still trades at a discount to Infosys on one hand. But again, incremental news like, for instance, the H-1B spouse not being allowed to work because of the visa thing which came about yesterday, can be an incremental negative. But again, from a company's earnings perspective, I don't think it will really matter.
Interesting. What is, to your mind, the best way to play the export theme? I know people will talk about IT, pharma, etc., but do you believe companies within the specialty chemical space or a couple of other, I mean, one thing is to say that all manufacturing will gain if indeed they are able to cater to the right markets. What's the best way to play the export theme?
I think still it's metals as well as suppliers to metals, companies such as Rain Industries, which supply to the aluminum industry. I know that aluminum going through Rusal, etc., and all that. So in spite of all that, so if you go back to when before the Rusal ban was imposed, we were still talking about a very strong outlook for the aluminum industry. And Rain Industries supplies raw materials to that industry. It trades at pretty inexpensive valuations. The company has done some company-specific restructuring as well. So companies like that, Philip Carbon, largest carbon black supplier in India, and everything with the color black in the world has a bit of carbon black. So they benefit.
Okay, interesting. So there are some different ways to play the export theme. Don't just get looking at only pharma or only IT. Yes, those are the poster boys, but we have a clutch of other pockets that could actually benefit quite a bit. And Chakri Lokapriya believes that stocks or companies which have actually multiplied 10x already from the lows could benefit as well. Chakri, take a moment to thank you for joining in today on Indian Open and being with us today.
Thank you.
Much appreciated.